Well, good afternoon, everyone. It's 20 to 2 here in the UK on a cold and wet day in Notting Hill Gate. It's Thursday, the 3rd of November. The interest rate decisions both in the US and the UK are behind us. Both central banks have pretty much done the same thing and put up rates by 75 basis points. The consensus was that the tone out of the US was hawkish, i.e. No taper, although some light at the end of the tunnel there in Mr. Powell's remarks. But nevertheless, markets sold off aggressively yesterday. And as you can see, the S&P has opened up 38 points down on yesterday's close. So as you can see, on Vector Vest US, an awful lot of red again. And the advice is not to buy stocks at this time. So if we have a look, and I'm going to open up the S&P 500 that I'm, in fact, trading for a living myself. Those of you that watched the video from a couple of days ago will know that I pointed out this level, which is also a fib level. It's 50% of the 5-wave move. It's 62% of this move, and clearly that support became resistance, and we have what Mr. Wyckoff used to call a clustering of the closes in around that area. If I can put on this trend line from the low to there, I haven't drawn it very well. Let me see if I can do that a bit better. That defined 3 touches, 1, 2, 3. And on, I think it was Monday or Tuesday when I did this, Tuesday I think, I couldn't quite make out whether that was a rising wedge or whether that was, in fact, a bear flag. But we right at the apex of that move, we have a pattern that is referred to by floor traders. I haven't seen it anywhere else. It's called a pop gun, which is an inside day and an outside day, which normally predicts a volatile and dynamic move. It is a energy pattern. It actually doesn't tell you which way the market's going to move. It's a scalar. If you remember your school physics, vectors get size and direction, whereas a scalar's just got size. And this is just pure energy building up here, and it broke quite conclusively yesterday. That breakdown through 3,800 would have been a good entry signal short on the daily chart. So what can we expect? Well, I think that the next level of support will come in at 62% of that, which is down here somewhere. Let's see where that is. That's at 3,650, folks. So we could easily expect this to fall to 3,650, and 78% is becoming more common. That would be 3,578, give or take a tick or two. I wouldn't expect support to come in any sooner than those two levels, although, as you know, markets can do what they want. I'm speaking probabilistically. I want to have a look now at the 24-hour market. That's the 24-hour market. I was long here and gave back a bit. That was Monday afternoon. I was in the VectorVest Q&A on Monday afternoon, and I was looking for a 1.618 extension up there, but it didn't happen, and I got stopped out on the underneath that low while I was in the meeting. But it did okay here. That trade, this is an early chart. That trade was based on a breakout of this flag pattern. Plus, there was a little bit of reverse divergence here. So I didn't trade that, but I traded this yesterday morning. This is a classic Wyckoff upthrust where, as you can see, we had support. It goes up and tests the support, goes up once, there's support, gives resistance once, and then goes back up again. And that was just the UK market getting going. As you can see, it went up, ran the stops, and then turned again. So if I can get rid of this line now, the stochastic was showing a bit of divergence right up in the overbought area, and that was flat that was rising. So there's a bit of divergence there. So I got a few points there. Got out well before the news. I'm 67, folks. I'm too old to be bothered with this trading the news. Although I may point out that this high was an exact 78% of that range from there to there, to the tick. So the smartest money in the universe had their sell signals up there, and the market went up and fetched them. Clearly, I was not a part of that elite community. There was plenty of time to short this down below that low, but your humble correspondent does not chase them. When I was a youngster, I found that chasing didn't work with young ladies, and it doesn't work with markets. So you got to stay cool. So I let it fall, watched it go down the page. This morning was a different matter. We had the stochastic, and I know people laugh at me on my stochastic, but it gives a great deal of discipline, and it improves the risk to reward ratio. If you're buying the damn thing when the stochastic is down below 20, and you're selling the damn thing when the stochastic's above 80, then that improves the risk to reward ratio. Although only a fool would get in with the stochastic signals on their own. They need to be confirmed by price action. So there we had a classic support coming into resistance, and there was also a little bit of reverse divergence, well, quite a bit of reverse divergence, we're not talking about, on the stochastic here, and like so. Didn't quite get to the overbought area. It was above 50. That's what George Lane told me so many years ago was important, but that rarely lets me down. And this happened really early. That was at 6. Your humble correspondent was still abed at 6, but by 8 o'clock I was up and about, and I managed to get an entry, and I took that bit down and got out earlier before this open at 1.618 of that, which was at 37.29. Maybe I think I got out at 28. So that money's in the bank. So the last couple of days, a little bit there, a little bit there, and a little bit there. I don't know how many points that is. I think about 70 points. So very happy with that. Managed. I don't need to take these high adrenaline moves to make my objective a month, which is about at this stage of volatility on the market, about 200 points. That target goes up and down. Sooner or later, the volatility is going to shrink, and 200 points is going to be unrealistic. But then the stop losses will be much smaller as well. So the amount of money made should be pretty much the same. So where are we now? Well, first of all, my old stochastic is down here, which telling me that if anything, if you get some confirmation, it'd be a good idea maybe to have a wee bit of a long trade here. So let's get rid of all the lines. I annoyed some Victimist people on Saturday by taking all the indicators off the chart. I like to see raw charts, folks. I think from this top, we've got 1, we've got 2, that's certainly 3, this is 4, is this 5? So I think that we can quite easily get a bit of a run up here, but it's falling. I'm falling hard at the moment, and certainly no sign of a bottom as yet. I couldn't short this market now for all the money in the world, because I could, but the stop loss would need to be above that 78% retracement of yesterday to give yourself a chance. And as you can see, it's flushing down. And I'm reminded now of, I got out earlier, but my dear friend Tom Hogarth always used to tell me that 80% of the points are made in the last 20% of the time of the move. That's something Tom mentioned to me while we were living together 10 or 15 years ago. He can't remember saying it, but it stuck in my mind, and it's helped me sort of sit in positions for a long time. Those of you that want to trade markets really short term, Tom posts all his signals online at tradertom.com. Too aggressive for me these days. But as I say, I'm going to sit and wait, let this exhaust on the downside. I think we'll probably see a bit of a bounce here today after that 5 wave down. On the stock market, I need to be careful because I have four open spread bets. That's them. Clearfield, I'm in the money and I've taken a bit. XLE, I'm in the money and I've taken a bit. Such huge variations in the oil price from people that I respect. Many people saying it's going to fall to 16. Many people that I also respect saying it's going to go to 120. And these are people that have been analyzing supply and demand for many decades. Shockwave, I'm a little bit out of the money, and the GDX, the gold price has collapsed this morning, and my ability to actually forecast the gold market at the moment has been in doubt. I've been on the wrong side of that for such a long time now. If we have a look at these, I don't think maybe I've got them up. I haven't. So let's just chart those graphs selected. And come on, girl, there we go. So that was my entry point. Let's go to the, that's Clearfield. That was my entry point. Given back a lot. I've taken a half off my stops at entry. We shall see. My objective is to do my best to keep my sweaty wee paws off the other half and let it run. Sometimes you give it back. So that's not bad. This one's going great guns. I'm in from just here on the 4th, wherever the 4th is. Yeah, the 4th, just there. From 79 odd, and it's now at 89. There has that move in the light of 2020 and 2021 would be insignificant, but certainly in 2022, that's a darn good move. So that one's good. Stop loss is well above the entry point there. And that's Shockwave. And Shockwave, unfortunately, that big pullback shocked me, that's for sure. Not a lot of fibs here, folks. That low is 78%. I guarantee if you went to the directors of this company and you mentioned fib to them, they would think it was a pizza, but or a make of ice cream or something. As you can see, that's 78% of that. And that low is 62% of that low. So the market's vibrating to fib numbers. I'm still positive. The earnings per share on VectorVest is great, but it's a small company and the technology is not that proven, although they've doubled sales for the last 2 years. And finally, that's the GDX that I got into it somewhere down here, and I'm just about at the money, and I'm just getting really fed up with it. It should have broken here, and I think I just got to get rid of that. So let's go back to the SPX on the home page. We're down 46 points now, market in free fall, folks. So nothing done by your humble correspondent yet. And I probably should have taken Tom Hogarth's advice and stayed for that extra 80% in the last 20% of the move. We shall see. Couldn't chase it down here for all the money in the world. I think we'll get a tradable bounce sometime this afternoon. I hope this helped. I think that we're going to see a bounce and then further downside in the SPX. Any open positions you've got in the US and in the UK, well, you need to watch their stop losses very carefully indeed. It looks as if this downside is far from being over. Thanks very much indeed. Bye-bye.